Добрый день, уважаемые
Good
коллеги,
afternoon, colleagues,
друзья.
friends.
Мы начинаем первую
We
сессию
are about
двухдневной
to begin
онлайн-конференции
the first
Банка
session of our
России, которая
two-day
посвящена
online conference organized by the Bank
коронавирусной
of Russia,
экономике
which is
и
dedicated
вызовам для
to
политики
post-coronavirus
Центрального
economy as well
банка.
as the
В
challenges to
течение
central bank
сегодняшнего и
policies.
завтрашнего дней мы
Today
обсудим
and tomorrow,
широкий
we're going
круг
to
вопросов,
speak about a wide
начиная
range
от
of
влияния
topics, from
пандемии на
the influence of the
денежно-кредитную
pandemic
политику
on the
как в
monetary
развитых, так и в
policy,
развивающихся
both in
экономиках,
advanced markets
о
and emerging
тех
markets,
вызовах, которые
to
это
the
представляет для
challenges this
долгосрочного развития,
poses to
для
long-term
динамики рынка труда,
development, for the
для
dynamics of the labor market,
ситуации с долговой нагрузкой предприятий.
for the
И
debt
также
burden
поговорим
for
о том,
enterprises,
как
to
текущий опыт
a
этого года
discussion of how
повлиял
exactly
на
the
то,
experience
как
of this
экономисты
year
работают с
has impacted
данными и
how
с
economists
информацией,
are
которую они
working with
собирают.
data, with information
Но
they are
первая
collecting.
сессия, она будет
But our
посвящена
first session
трансмиссионному
is going to be dedicated
механизму
to the
кредитной
monetary
политики.
policy
И
transmission.
те вопросы, которые мы бы хотели
The
в
issues
ходе ее
we would
обсудить,
like to talk
они были
about
обозначены
during
на
this
тизере
session
к сегодняшнему
have already
сегодняшней
been
встрече.
included in the
Если можно
teaser
дать
for
первый
our
слайд,
today's
мы
session.
повторим
Could you
их,
please
чтобы
put
еще
up
раз
the first slide
напомнить о том, о
to
чем мы
remind
хотели
you
бы
what
поговорить в течение
exactly we would
следующего
like to
часа.
talk during
Как
the
на
next
трансмиссионный
hour,
механизм денежно-кредитной
exactly
политики могут
how
влиять
the
ограничительные меры, которые
restrictive
были введены
measures can
различными
influence
правительствами
the
в
monetary
рамках борьбы с коронавирусом,
transmission
насколько изменение ключевой
mechanism,
ставки может
how
влиять на
exactly
долгосрочные кредитные
the
ставки
key
и на
rate
денежно-кредитные условия в
can
экономике в целом,
influence long-term rates and monetary
что означает
conditions
для
and the
эффективности
economy as a
трансмиссионного
whole.
механизма
What are the
переток сбережений
consequences for the
населения
monetary
на
policy
фондовый рынок,
transmission of
наличные
the
деньги
shift
и
of
другие
households' savings
формы
towards capital
накопления,
markets and cash?
как на трансмиссионном механизме
The next
сказываются
question
те
is
льготные программы
what the
кредитования,
impact
другие меры
is for the
кредитной
monetary policy
поддержки,
transmission from the
которые
subsidized
задействовали
lending
правительством
programs
во
and
всем
other
мире.
credit
И
support
также еще
measures
один
the
вопрос,
governments have
который был
resorted to
добавлен в
all
ходе
across the world.
подготовки к
And
сегодняшней
another
дискуссии с
question that we
нашими
have
спикерами, это
included
насколько корректно
for our
примеряет
today's
Россия
discussion
сегодняшний опыт
is as
доконтрактных
follows. Is it
стран.
appropriate to apply to
Сегодня к
Russia
нашему
today's
обсуждению
monetary policy experience of other countries?
Филипп Картаев,
Joining us
завкафедрой
today are
методов
Philip
анализа
Kartaev,
экономики экономического факультета
Deputy
Московского
Head
государственного
of
университета,
the
и Александр
Chair
Исаков,
of
главный
Economy
экономист
from the Moscow State University.
«Капитал»,
We also have with
а
us
также
Alexander
по
Isakov, Chief Economist of the
видеолинку из
VTB Capital, and
Вашингтона
joining us
с нами
online
Жак
from
Миньян,
Washington
руководитель
as
миссии
Jacques
МВФ
Mignan,
по России.
IMF Mission
И
Chief
прежде
for
чем
Russia.
перейти к нашей беседе,
And
я
before
бы
we
хотел
get
напомнить,
down to
что
our discussion,
мы
I would
в
like to
ходе
remind you
дискуссии
that
ждем вопросы
during
от
today's
зарегистрированных
discussion, we are waiting for
участников.
questions from the registered participants, analysts, experts, economists, and we hope that these questions will get to us through our discussion, and I'll try to ask these questions if they fit the discussion and where it's going. And I think this is the end of my opening remarks. And before I get down to questions addressed to our participants, I would like to pose the first question to our audience. What do you think the inflation rate is going to be in Russia in 2021? You can see this question on your devices. You can choose the answer you believe is most appropriate, as most plausible. And to facilitate answering this question, I would like to remind you what the inflation rate has been like over the last 4 years in Russia, since the Bank of Russia completed its transition to inflation targeting. And since the inflation rate stabilized around the Bank of Russia's goal of 4%, you can see the slide, the red line and the bottom is the inflation rate dynamics. And as you can see, it's been fluctuating in a range from 2.5 to 5.3% at its peak in early 2019, whereas the monetary policy itself has undergone huge changes. You can see the key rate represented by the black line. It has decreased from 10% to 4.25 in July this year, after the Bank of Russia tightened its transition to an accommodative monetary policy in response to a drop in demand that was brought about by the coronavirus pandemic. The other graphs represent the interest rate for the federal loan bonds OFZ for 2 years and 10 years, as well as for corporate loans average rate. And this is the representation of the transmission mechanism, because the interest rate, the key rate, influences other markets, other interest rates, and it also has an impact on inflation, but the lag is quite big. Our assessment is it's from 3 to 6 quarters. So the inflation monetary policy has targets, but they are sort of removed for several months, several years, and we have to act proactively, predictably to forecast. But the first one to speak, I think, will be Jacques, if you don't mind. The IMF mission has just completed its visit to Moscow this year. It was virtual. It was an Article 4 mission drafting a report, and I think many of you have already had a chance to get acquainted with the main conclusions the mission has included in its final statement. And I think in January or maybe in February we will be getting a more detailed report. So, Jacques, could you please sum up the main conclusions on the current conditions, the current situation? What is your forecast for next year? And you could probably dwell on the last question we put on the first slide, namely, what is the correlation between Russia's conditions right now and the world experience? Jacques, the floor is yours.
Well, Alexei, well, you gave me permission to call you by your first name, so thank you for that, and thank you for inviting me to the conference. It's a great honor to be here. I think the first point I want to make is exactly answer that question. And it's very important to know that Russia today is in a very different place than many advanced economies. As you can see on the side, on the left, inflation in the euro area is very, very weak. It's even gone negative on a year-on-year basis. Inflation in the UK has been falling steadily and is again now at very weak levels. And inflation in the US has picked up a bit recently, but is well below the 2% target. Whereas Russia, which you can see on the right, it had come down very, very fast before the crisis, after the VAT hike in late 18, early 19. But after the crisis and after the ruble depreciation, inflation has picked up. And in November, it was at 4.5%, well, 4.4%. Now, people may think low inflation good, high inflation bad, but actually that is not the case in the particular juncture. I think we economists know that having really weak inflation, 1% or below, is problematic for a central bank because it gives the central bank a lot less room to respond to a crisis. Whereas the Central Bank of Russia, being at 4.5 inflation and interest rates at 425 basis points, has a lot more room. So I think the first message I want to pass on is that Russia is not in the same situation, and in many ways the situation is more comfortable, quote unquote, from a pure monetary policy perspective. This being said, let's not be complacent, because inflation was very weak before the crisis. As you can see, it had hit under 2.5%. It was falling. And we don't know where it's going to go from here. Is it going to peak and come back down again? Is it going to continue to increase? I know we will discuss uncertainty. But I think the key message then from this slide is the Central Bank of Russia is right now in a good position, in a better position than many central banks, but there's no room for complacency. Now, you talked, Alexei, about transmission, and the policy transmission has worked in Russia. You reduced policy rates quite a lot, as you said, And lending rates have come down, the rates that people pay on mortgages, on unsecured loans. So they have come down. Short-term rates have come down, long-term rates have come down. So the monetary policy transmission mechanism is working. Unfortunately, this is not enough in this crisis. And can I ask for the next slide so I can tell you why? This crisis is unlike most any other crisis in the past. This is a crisis where you've had a very, very, very big shock to certain sectors. Sectors which suffered declines in activity of 50%, 70%, things which are unheard of outside of war situations. And then, at the same time, subsectors have done extremely well. So the main role of policy in this crisis, the main objective, is to avoid big bankruptcies in these sectors which have been affected, so that these bankruptcies do not create a chain of bankruptcies that reverberate throughout the economy. So this means two things. It means that help has to be very targeted, because as I said, some sectors have suffered a lot, some have not suffered at all. So the help has to be very targeted. But in the sectors that you need to support, the help has to be very large. If you are, for example, a chain of hotels or restaurants and you have lost 70% of your revenue, lower interest rates on your loans are not going to make a big difference. You need a lot bigger support. And because the support has to be very targeted and very large, fiscal policy is a key instrument, because fiscal policy can be both better targeted than monetary policy and larger, in proportional terms. So what I'm trying to say is that even though the policy transmission mechanism has worked, without fiscal policy, this would have been a very, very, very bad crisis for Russia. And I think it's something to celebrate that for the first time, both fiscal policy and monetary policy and macroprudential policy could act at the same time in Russia. That was a very important thing. Now, I talked about the importance of fiscal policy, but of course, this is not to say that monetary policy is not key. And monetary policy has, I think, 3 or 4 key roles. First of all, avoid dislocations in financial markets. You remember, Alexei, in March, capital flows, huge uncertainty, spreads, going through the roof. The central bank stepped in through intervention, through new instruments, and really calmed the markets. And this was fundamental, because if you lose the confidence of the markets, the crisis is going to be much, much worse. So that's the first thing. And the second thing, and very important for the Bank of Russia, is to keep inflation expectations, what we call anchored. Basically, it is important that people continue to believe that the central bank is credible. And in both ways, it's important that people don't think that inflation is going to be much higher, but it's also important to avoid that people think that inflation is going to be much lower, because then we go into the traps of low inflation that I discussed at the beginning. So to sum up, I think from a monetary policy perspective, Russia is in a good position, but there's absolutely no room for complacency. The second key message is that it was very important that both fiscal and monetary policy acted at the same time. Without one or without the other, it would have been really, really bad. And now I think we will discuss, the future. Let me say, you wanted me to give our forecast. I think we see inflation at about 3 to 3.5% at end 2021. But there's huge uncertainty, and I think that's something that we're going to discuss later on in the panel. So let me stop here, because I think there's going to be a lot of questions. Thanks, Alexei.
Спасибо большое, Жак.
Thank you very much, Jacques, for this substantive and comprehensive brief overview. And I think before we move on to our next speaker, I will suggest that we should have a look at the vote we proposed at the very beginning for you to participate. Could you please put on the outcome of the vote? So I'm a little bit surprised by how symmetric the outcome is and how close it is to the Bank of Russia's forecast for next year. So you can see mostly the forecast is that it's going to be at 3.54%, but still the dispersion is still big. Only 50% of our respondents believe that the inflation rate is going to stay within 3.5 to 4%. Around one-fourth believe that disinflationary trends are going to move to the forefront, and around 10%, more than that even, expect the inflation rate next year to be above 4%. It would be very interesting to know how dispersion would have looked like if we had conducted this vote a month ago based on November results. But now let's move on to our next speaker. It's Alexander Isakov. I know that the inflation forecast for next year is 2.53%. That is the forecast of VTB. So you believe that the inflation rate is going to be somewhat below the Bank of Russia's forecast. Alexander, could you please elaborate on that? Why such a low inflation forecast for next year? Is it because of the monetary transmission? Or maybe because it's going to take more time to get the inflation to its target? Or maybe it's because of the low base and the dynamics you expect for next year? And the second question, getting back to the first slide with the topics, could you please share with us your views on how exactly the accommodative monetary policy translates into interest rates? First, it was a tight policy, then it was monetarily tight, and we saw growing yield rates. It was somewhat surprising for Russia. So, Alexander, over to you. Yes, indeed, we believe the inflation is going to stand at 2.83% next year, a little lower than Jacques' forecasts. Why do we think that? I think it's not going to be a revelation for anyone. It's no corporate secret. But in our profession, the economists that forecast the inflation precisely are those who understand the food market very well. Even though it's not the biggest part of our basket, it's the most volatile element of our basket. That element that determines the growth or the decrease. If we see at the last 2 months, it's precisely the case. We were at 4.8. Right now it's 5.8, 1 percentage point. That's very much given the current growth of prices. So my response to your question is as follows. This year we see a more rapid normalization of prices for a great number of food goods. The figures for October, November make us believe the inflation rate next year is going to be lower for the food segment. I'm not going to name, it's sugar, fish, meat. We believe all of them will give us around 4.5% by the end of this year and below 3% next year. Does this mean that the transmission is weaker than we thought? No. I think the inflation is going to stay below 4%. Is that the case? No, I don't think so. I think that there is a 2-year cycle in the food segment. Sometimes there are good crops, and then they are followed by the crops that are not that good, and this translates in the aggregate inflation rate. And it's a separate question whether we have to follow so closely these points in inflation throughout the year. Maybe we have to calculate inflation in a different manner. Maybe we're going to talk about that in inflation in this conference.
Now, just briefly about the transmission mechanism. If you're talking about some prospective rates, like looking forward, how would they react to the decisions made by the Bank of Russia? But rather, the question should be how they should react to the Bank of Russia's decisions. I don't think that there should be some reaction. Some long-term rates should not really react to any decisions of the Bank of Russia, either big or small. There's some balance, and the long-term rate or the rate of the future would depend on our perception of the equilibrium rate. We think it is currently between 5 and 6, and really this determines those long rates. And one thing which has not been appreciated too much and not too much discussed is just by how much this softer financial stance really was held by the rates of the Bank of Russia, and this has a more impact on those. And this is something that we need to really devote our time rather discussing individual rates. We saw very nice graphics. We saw that the rates were going down together with the policy rate. This is good, but this is not that important. In recent years, we were not in equilibrium. We were looking for something that would become equilibrium after the stabilization of inflation and of rates. So we came to lower rates than we were thinking like 4 or 5 years ago. That's good, but this does not mean that we should not really be looking at the short-term volatility. Short-term rates should be volatile, actually, so that the long-term rates would not be such. But just by how much the short-term rates should be volatile, I think that this is the key question today. And the key question is the share of the loans at the floating rate in the economy. There are many factors that determine the efficiency of the transmission mechanism. We have a lot of academic literature which is devoted to such research, which is the current phase of the cycle, how efficient a transmission mechanism is, etc. But algebraically, I would say the effect of the first order is the share of the loans fixed at the floating rate. The Bank of Russia actually issued a brilliant financial stability report showing how much the share of the corporate portfolio grew when loans are fixed at the floating rate. So volatility and of our policy rate would actually be lower because the effect of that influence, and then that influence is by an order stronger. So I think that indeed we're going to see some lower inflation next year, but secondly, most probably the transmission mechanism has become stronger of recent time. Thank you, Alexander. Just some point of terminology. When we're talking about volatility of the policy rate, we're talking about the fluctuation of the policy rate along the cycle of the monetary policy. It's not that we're talking about fluctuations within a very short period of time. It is rather a monetary policy normal cycle. And yes, indeed, here it is a very important message that the more confidence we have in the monetary policy, the more stability we have in our inflationary expectations and its anchor, and the associated long-term rates, which is actually determined by the inflationary expectations, the more headroom the Bank of Russia would have for the counter-cyclical policy by changing the short-term rates. But with a more efficient transmission mechanism, the need for changing the short-term rate at the same time would be less. So thank you very much. Indeed, we probably would come back to this idea of the level of the neutral rate a bit later. But now, if I may, I would like to give the floor now to Philip. Can we really bring back the results of our voting? Philip, if I may, I also would like to hear your interpretation and your comments on such an outcome and such the outcome of the opinions of our audience, just what would be the monetary policy and the monetary conditions that we can expect in 2021. And I know that you, in your academic efforts, wrote some articles about the comparison of net and hybrid targeting regimes, inflation targeting regimes, regimes that involve the operations in the FX market, for example. So the question is, the fact that we have a fiscal rule in the way that we have it, and the mechanism of mirroring the fiscal rule, which is followed by the Bank of Russia, and actually that was followed even this year, just by how much such a fiscal rule would really help pursue a clean or net inflation targeting policy. In terms of projections and forecasts, and in my opinion and the opinion of the audience, and maybe the opinion of VTB Capital, the impression is quite good, actually. Just thing is that any of those outcomes, more conservative or less conservative, it is still going to be a good outcome because the inflation would not fall below a level where we can be threatened by deflation in the sectors that we don't want to have such deflation. But at the same time, the inflation rates are not going to be too high to risk losing those advantages that we received in recent years. So 3.5%, 4%, this does not really matter in principle, would be good. Regarding your second part of the question, which is really linked to the first one, such inflationary expectations actually prove that so far the mechanism of monetary transmission is working in a way that we were expecting it to work. And there are two reasons for that. One reason is that we're in good shape and we entered fit and healthy into the crisis with a low inflation and with good anchors for inflation. And the interest rates, although they were falling, they are still not zero, which means that we still have some headroom for the traditional measures to incentivize and boost the economy, which is something which differs us from the other countries. And this is actually answering one of the questions in the list of questions that you presented. So far, I think the transmission mechanism is quite good because our interest rates are far from being zero. Now, the FX rate and the hybrid regimes, I think that here it is important to remember the important contribution into the efficiency of the transmission mechanism from the fact that the fluctuations of the FX rate have a less impact onto prices. According to the estimates of the Bank of Russia and the academia in general, we do see some less impact of the FX rate on the prices, which means that any sharp depreciation of the exchange rate would cause fewer risks for inflation, which makes it possible for the Bank of Russia to manage inflation in a better way, which is also good. And this whole story is also related to the fact that we need to choose between the different regimes of inflation targeting. And any central bank that comes to the idea of inflation targeting, including the Bank of Russia, faces a dilemma that on the one hand you need to have a floating exchange rate, but on the other hand, if you really allow free floating of the exchange rate, any very strong fluctuations would really have an effect on the prices. So it's important to have less impact on the prices and also the experience of fiscal rules here actually is quite good because it removes the excessive fluctuations of the exchange rate and helps transmission mechanism. And it is the experience of both Russia and other countries that use some form of fiscal rule. And In this sense, I fully agree with the introductory remarks by Jacques that in strong crises it is important to have some coordination between monetary and fiscal policies, and the rules actually that have been introduced help the Bank of Russia to do so. Thank you very much. We are coming to the middle of our first session, but let me just ask one question from the audience to you, and this is a question about whether and by how much the policy of the Bank of Russia is centered on the 4% target. Nikolai Frolov from the Central Bank of Russia says that some observers believe that the policy of the Bank of Russia is asymmetrical and is hovering at around 4%, and the expectations are much higher than that. We were talking 3.5 to 4%, but rather not the 3.2, or 2.8 to 3.2%. Take the inflationary expectations that we take from the OFZ inflation indexed rates. Do you believe that this risk is quite serious or not? Maybe you would want to answer that to all the panelists today here. Maybe Jacques can also comment on that. The mission also said that in its report, the observation that the inflationary expectations, well, imputed in the OFZ curve are lower than the 4%. Jacques, what do you think about that?
You know, Alexei, that's a difficult question. We spent so many hours trying to figure out what expectations are saying about inflation in Russia. And I think it is a problem that we don't have an answer, right? And I think in many countries, you sort of know what expectations about inflation are. In Russia, we have these very divergent views where household expectations are way above, 4%. And then, market expectations, such as those derived from OFZ, well below 4%. So I think, we cannot be religious and dogmatic about one or the other. That's the first thing. But I think we need to take the risk of lower than 4% expectations and outcomes seriously. I understand the monetary history of Russia. I get it. I grew up in a country with really, a history of high inflation and other things. So I understand, the cost of that. And I understand why achieving low inflation was a huge success and why you want to preserve it. But it's important not to have, an asymmetric bias, because it's obvious in this crisis that there's a lot of pressures that are pushing inflation down in the world, not yet in Russia perhaps, but certainly in the world. And as we discussed before, the risks of low inflation in a context where aggregate demand is insufficient here and in the world are really pretty bad. So I think what I'm trying to say is it's important not to basically ignore signals that inflation could be weaker than target. And it's important not to have an asymmetric bias. But at the same time, I do recognize that inflation has been running a bit harder than we predicted, and that the effect of the exchange rate on inflation has been stronger and more persistent. So right now, the central bank is in a good spot. We're at 4.5%, which is fully consistent with the target, because the target is not exactly 4%. But I would not completely wave off any signals from OFZs that expectations could be below 3%.
Спасибо большое.
Well, thank you very much. For the sake of time, I would like to briefly, Alexander and Philip, debate on that same question, which, if I may, I would kind of like word in a few words. Do you think the there is a significant risk of lower than targeted inflationary expectations based on the fact, based on the policy pursued by the Bank of Russia. Briefly, first, I think that to answer this question, you don't need really to look back into history. The last 5 years were not a period of equilibrium, and the initial deflationary period and in the context of inflationary expectations, a good central bank should be able to shift downwards to really win the authority and respect. There's no other way. The prices never stabilized without some initial downward movement. And also in that period, we were still looking for some point of sensitivity in the economy to try to understand how the economy is going to react to our policy. So we should be looking forward. And also, our aggregate inflation is good and should be targeted, but it is also volatile. The numbers for the end of the year, for the end of December, is not something that we should be actually looking at. We need to be really looking at inflation in domestic services, in not regulated services. Now, if you look how those domestic services were growing, what was the inflation there? This is something that we really need to take into account, which those domestic services were not sensitive to the exchange rate, and back then, before the crisis, we were about 4% there. So, and inflation in those services really never increased, so I don't see any major risk there. Philip, I would have a different explanation. Actually, I really like looking back into history and the inflationary expectations. Thing is that but at the same time, I also agree that we should not be overestimating those risks, because if we take a look at what has been happening of late, our inflationary expectations were much higher or higher than the level that the Bank of Russia wanted to have. And even the projection and the forecast that we now see, it is more from the expert community. Now, it might be different from a larger community of the people of Russia. And question is, really, would the central bank have some asymmetrical biases or not? Maybe, Alexei, it is more visible to you. But all I can say is that for 2021, we would be looking at the symmetrical target of inflation at around 4%. But given our not too far away history of inflation, the Bank of Russia probably, and the board of the Bank of Russia would be probably giving more weight to pro-inflationary measures. Ex ante, it is, of course, 4%, but pro-inflationary risks really gets more attention during our board discussions and meetings. Thank you very much. We only have, 12 minutes before the end of this session, but let me take up some more questions, and I would ask you to be brief in answering those questions so that we don't exceed our time. My next question, again, would be to Philip. And this is not a very standard combination, such as inflation and inequality. In your recent article in the Issues of Economy journal about some impact, an interesting impact of inflation on inequality. So my question is rather the opposite. Do you think that inequality in the economy, in society, may affect the efficiency of the transmission mechanism of the monetary policy? That's just meaning that if we have a community, a society where inequality is less, would it be easier for a central bank to pursue its monetary policy and reach the price stability target? Or is it more difficult? Or maybe you would think that there's no special effect for central bank and for Bank of Russia?
That is a very interesting question, because as far as I know, if one looks at the world experience, then one might have a thought that inequality can have an impact on the efficiency of the transmission mechanism, and high inequality decreases the efficiency because it means that there is relatively large share of poor people and a relatively big share of very rich people. But when there is an accommodative monetary policy as pursued, rich people have a relatively lower marginal propensity to consume, and the consumption of poorer people is not changing that much. So when the population is more homogeneous, then the monetary policy is relatively more efficient. Maybe that's not the reason to do everything to fight inequality, but fighting inequality has this additional benefit. Jacques, if you can add any comment to what Philip has told us, I would be very much interested to hear that. But my question to you bears on another aspect of what we've been discussing for a long time during the mission's visit. The commonplace about the year 2020 and the consequences of the ongoing pandemic is an uptick, and a sudden one, of uncertainty that has to be factored into our forecast model for the future, and also it makes us have to change the very parameters. Our models have less predictive capacity because of this growing uncertainty as compared to what these models were capable of before the pandemic. My question is to you how important it is to factor in this surge in uncertainty in terms of pursuing a robust monetary policy, given the risks that we might end up in a very slowly growing world with a very low trajectory of potential output, which will mean a lower gap between the disinflationary impetus and the output trajectory. Thank you.
So that's a very difficult question, Alexei, and I think there's no answer, and there's a lot of debate in the academic and policy community about, what should be done. I think, we need a lot more modesty. As you say, there's a lot more uncertainty about the future than in normal times. And in fact, the differences between the Bank of Russia and us on inflation are well within the range of uncertainty, right? So that's one thing. The second thing I would say is that it's tempting because of uncertainty to stay put, but you cannot let uncertainty paralyze, policymakers. At some level, action is needed, and the worst thing that you want to do is not act and use uncertainty as an excuse. That's a second consideration. Another thing that I think is important, and it goes back to what you said, there is uncertainty both ways. I think it's very clear that, at least for Russia, in advanced economies that may not be the case, but in Russia there's pro-inflationary risk and there's disinflationary risk. And I think my advice would be not to have a bias. Because I think in the current context, having inflation really undershoot the target could be really damaging. And that's a situation that you're not in, and that's a situation where you don't want to be. So I think that's another thing to consider. But again, I don't have perfect answers. If I may say one thing about inequality, is that okay? Yes?
Yes, если вы могли бы, да.
Yeah, if you could.
So to what Philip was saying, I think one way inequality is thought to have affected monetary policy throughout the world, as Philip was saying, richer people have a lower marginal propensity to consume. So the increasing inequality is thought to have led to an increase in savings slowdown. And as such, it may have contributed to lowering the equilibrium interest rate. And that means that it makes it harder for central banks to achieve the real interest rate that you need to stimulate the economy and keep it at full employment. So that's another thing to consider. But that's not yet the case in Russia, as I said. We are actually below right now the what we call the equilibrium rate. So that's good.
Спасибо большое. И приближаясь...
Thank you very much. And we are moving on to the end of our first session and the last question before the final blitz. My question to Alexander. I'm going to join the question I wanted to ask with a question that I got from the audience. Oleg Shibanov from the Russian School of Economics is asking how largely the transmission is changing given the shift in risks assessments by the banks and the decrease in the quality of borrowers against the backdrop of the crisis. I wanted to have a comprehensive picture. My question was as follows: how strong the effects are of that lending support that many governments across the world are providing both to citizens and to enterprises as compared to the transmission. Maybe you could say a couple of words about the shift of household savings into stock assets, how it impacts the monetary policy. For the sake of time, I'll be very brief. First, how big is the influence of decrease in interest rates on the financial conditions, the way we saw it against the backdrop of the COVID pandemic? We believe that the influence of the monetary policy is less than we expected. We always wanted to be more. But there was one factor that was underestimated, that is the role of credits at a floating interest rate. And this year, many borrowers were borrowing at a floating rate, and they saw a direct influence of the actions the central bank has taken without a lag. It was a direct transmission. As Oleg has pointed out, in a recession, borrowing conditions are tightening, which restricts the effect of interest rates. But when interest rates are floating, when they can change, it helps transmit this impetus to the economy right away without a lag. And that is very good. And we have to remember that when we feel a link between a recession and a weaker monetary policy transmission, I don't think that is always the case. The efficiency of the monetary policy transmission over the recent years has been greater than we saw it throughout the history. Now, a couple of words about the shift of household savings. Around 3 years ago, we talked about fintech, about banks, about risks for the transmission mechanism. But in the end, the banks decided to spearhead this movement, as many had predicted. And this is what we're going to see in this shift of household savings. I believe this is going to be a regulated process. It's going to be smooth. It'll make the assets of households more diverse. Their main asset is still going to be their real estate, but they will be diversifying their assets, and this in turn will help hedge the risks. And in 5 years or so, we will say that the main transmission channel is not the exchange rate, but the welfare. We'll be talking about how interest rates affect the well-being of households. We've almost exhausted the time, so we'll have to postpone the Blitz session until a similar event. Thank you very much, dear participants, audience. Next session is going to be dedicated to the interlinks between the policies of AMs and emerging markets. It'll start in 10 minutes at 5 p.m. Moscow time. Thank you.
Thank you.
another session of this great conference, which is about the interdependence of the politics of the advanced markets and emerging markets in terms of the challenges faced by the central banks in the new decade. Honestly speaking, almost everything that we are going and can talk about are about challenges, because there are so many new things that we're facing now. Particularly important is to note the panel of our speakers in this session. And I shall begin with the yet not joining us Elvira Nabiullina, the governor of the Russian Central Bank, who is going to join us very soon. Elvira has been the chairman of the Russian Central Bank since 2013. Before that, she was the assistant to the Russian president, the Minister for Economic Development, and in charge of the key Russian think tank, the Center for Strategic Developments. We also have Ksenia Yudaeva, deputy first chairwoman of the Central Bank, the person who has been working with Mrs. Nabiullina throughout all her tenure at the Central Bank. Amongst the Russian participants, we have Oleg Vyugin, chairman of the Supervisory Council of the Moscow Exchange, who also worked as the first deputy chairman of the Central Bank, as well as was the head of the Securities Commission when the regulator of the exchange was a separate entity from the central bank. It is a great pleasure for me to introduce the chairman of the Croatian People's Bank, Boris Vucic, who has been in charge of the bank, Central Bank of Croatia, and Alexander Diaz de Leon, who is the chairman of the Mexican Bank. So let us begin our discussion. The topic is a very important one. I'm not going to make an introductory word in view of such excellent speakers. The only thing that I would mention is that we would be waiting to receive questions from the registered participants in the course of the sessions, and we will do our best to answer, if not all, then a few questions in the course of our deliberations. I would also like to say that we anticipate, and I do suggest that we should do it right now, I mean the online polling, the online questionnaire. Let's see what is going to be. We will vote in the course of 5 minutes. That would not delay our discussion, but in the course of 5 minutes, the viewers will be able, and the spectators will be able to vote. Can we see the questions, please? Could you put it on the screen? All right, I will read them out. So, question A, the monetary and fiscal policies and how they correlate. Currently, many believe that the threshold are being eliminated, particularly they're fading out, particularly because of the quantitative easings and with the central bank's practices of buying the sovereign debt. So this is the first question. The second one, low inflation. The third one, high inflation. Which of it are the challenge to the central bank? So nowadays, many are afraid of the low inflation and deflation, but as they say, stagflation hasn't yet gone away for good. And so we are supposed to be guided not only by the great experience of the Great Depression of the 1930s, but also the 50s with the stagflation that we remember in the many of advanced economies. So what's going to be the major risk for macro stability? And finally, the question about the debt burden. What will be the problem or challenge? The corporate debt, the government debt, or the household debt. Of course, not all of the risks are listed here, not all the problems which the central banks will have to encounter, but we also are aware of the climate problems risk, as well as the digital currencies and the inter-currency competition. But we decided to limit ourselves to the four most obvious and debatable problems, so it's going to be of interest to see how our listeners may vote. So let us now begin the discussion. We expect that we will do 2 rounds, 2 big issues, and I may vary in between them depending upon our range of speakers, and I shall begin with the first one. And I would like to say to the speakers that we're following a very tough timing, so I will try and watch out for this time, and most importantly that we'll finish on time the session. So the first question which we wanted to discuss, what are the measures that have been applied by the central bank, so they intend to apply in this unconventional environment that we're in, which is a very hard crisis, not coming from the economic nature, which is a particular thing about this year, but the economic consequences which have been brought about by non-economic reasons, the pros and cons of unconventional measures that the central banks applied this year, and generally speaking, to what extent the measures which we describe as non-standard, non-conventional, may turn out to be standard and conventional, because quite often things that seem temporary become permanent. Temporary, not for good, but if this is something that lasts for 2 generations, that seems to be forever. So I shall begin with Ksenia Yudeva. Please, Ksenia Valentinovna. Thank you very much. Well, the Bank of Russia, we're a mega regulator in terms of the policies that we have been using. We have applied a packaged approach. We applied measures of the monetary policy and regulatory measures simultaneously. Now, speaking about the monetary policy, from the beginning, we have slowed down the lowering of the rates because we feared some of the short-term inflation risks. But later on, when it became apparent that the risks were over, we made this policy very accommodative. We offered a lot of liquidity because there were some points in time with the peak demand. Then we expanded the limit in terms of the currency liquidity, but that was not really required. We also went through a whole range of regulatory easing. Some of them we previously had applied back in 2014, but came out of them. That was the easing in terms of non-revaluation of assets. And primarily, we also had measures which stimulated the banks in the first place to restructure their lending to the most vulnerable borrowers, households and small businesses. A couple of words about what we haven't done. Firstly, we didn't acquire assets. The novelty of the current crisis in some cases was that not only in the advanced markets where there is a zero inflation and the zero rates by the central banks and they do the quantitative easing, and that many emerging markets where the central banks were buying assets, and specifically the sovereign bond. This measure we didn't go for because the fluctuation of rates in this market has occurred, but not very broad as we thought, so we decided to do without these measures. And there were several things that helped us. First of all, our fiscal policy, principally speaking, we haven't had a problem with the macroeconomic stability before the crisis, and that, of course, was quite a stabilizer during the crisis, which helped us to avoid doing some things like, in other cases, like counter-cyclical policy, which we decided to pursue. And secondly, our approach to the measures and the way we pursued our monetary policies and some of the regulatory easings also gave us some good hand. Sometimes we hear that the long-term repos that we have introduced, these could have been a substitution for the asset acquisition measures, but actually not at all, because these measures were about stabilization of liquidity due to the fact that we have seasonal effects in our fiscal spending, because the budget has accumulated quite a lot of resources in the course of 2/3 of the year's tax incomes and as well as the borrowings. And so the third part of the year, as it really likes to demonstrate huge amounts which seriously affected the structure of banking liquidity. And so for some time, the demand for this instrument of a monthly liquidity really peaked. But we do ascertain that the demand is not so strong, and it started contracting because apparently the budget money may start flowing back into the economy. And the final thing about the currency intervention, I can't say that we're not doing these at all, but I would say that these are standing very far apart from the massive interventions, which is what we had done in the previous years. So throughout all of the channels in terms of the currency sales, we did were 300 million. In 2013, there was one day where we sold, 3 billion, 3 billion in a day was very typical. So effectively, the kind of innovation that we went for, with little blood being shed, as part of the fiscal rule, we were selling money that we earned from our transaction with Sberbank with an increasing portions against $20 per barrel. So that was a bit of a stabilization of the hard currency income against the price below $25 per barrel. On top of it, we had currency sales as well as part of the fiscal rule. And I must admit that basically there's no reason to say that we demonstrated results which were worse than in some other cases where massive interventions were resorted to, and the kind of the macro frame that we exist within helped us to stabilize the market through such very pinpointed kind of measures. So speaking about the future, in our case, I would say it is very crucial to be able to go back to the normal situation on a timely basis, because we are currently spending our buffers, but we will have to set them up again so as to maintain the macro stability and be ready to face new challenges. So let me finish with that. Ksenia, can I immediately ask you a question which we received? The very first question that we received was exactly about this. One of the listeners, I think it was a Uzbek bank, asks, maybe one should finally give up about this, from floating kind of an approach to the controlled exchange rate. I mean, bearing in mind what you've just told us about the March of 2020, it's a bit of a scholastic question in my mind, because it's not about the way you word it, but there is still a question. I think it's Sergei Romanchuk, I'm sure, because he is the author of the question, because this is the question he regularly pushes at us. But I believe that we decided to give up on it. But it really doesn't make sense, because any extraordinary measures is what one needs to go for in an extraordinary environment, because in a normal environment, this country's economy is quite capable of adjusting itself to the floating exchange rate. And then nevertheless, anything to do with the oil prices where there are some uncertainties is very important to really monitor and be able to adapt on the one hand. On the other hand, there is a fiscal rule which is exactly the kind of a stabilizer we need. Mr. Diaz de Leon, the chairman of the Mexican National Bank, your experience in this year, to what extent you resorted to untraditional measures and how traditional they may become in the future?
Thank you. First, let me thank Elvira Nabulina, the governor of the Bank of Russia, for inviting me, and also say hi to the rest of the panel. Let me start saying that Banco de Mexico, and I think emerging markets, we all faced a very significant challenge. The COVID-19 had a three-layer challenge. First, it was a shock to the supply side, to the demand side, and a financial shock. In terms of the financial shock, we faced capital outflows in a very significant and sizable way. In the case of Mexico, we had at the peak of the outflow, $16 billion of outflow, which is the most on record. And so that has entailed a dual challenge, not only to support the recovery, but also to promote stable financial conditions and an orderly adjustment of our financial markets. We have basically done two things. One is to reduce interest rates. We brought down interest rates from 7% to 4.25%. We have seen inflation picking up in contrast with other countries. And we also introduced a series of measures to provide liquidity to domestic markets. I would highlight that there is a difference between providing liquidity in the midst of in the middle of let's say risk aversion episode, and another with systematically buying or these asset purchase programs or these unconventional monetary policy. I think that providing liquidity against sound collateral has always been a part of central banking from the creation of central banks. Nonetheless, QE is sort of a different type of intervention or tool. Let me start saying that advanced economies that pioneered with these unconventional monetary policies did so because they faced chronic low inflation below their targets and inflation expectations below their targets, and also chronic weakness in aggregate demand. Those three conditions may not be present in a large number of emerging markets. So we need to be mindful first of that. And now let me say the following. Advanced economies asset purchase programs, what they try to do is to bring the whole yield curve of interest rates lower. So the central bank brings the daily interest rate low, but the long-term interest rate is also tried to be pushed downwards in order to increase, let's say, the effect on aggregate demand. In emerging markets, long-term interest rates are more dependent on risk premia, and risk premia both is related to fiscal sustainability and also to long-term inflation expectations. So I think in emerging markets, we have a clear challenge. We need to address how can we induce the lowest yield curve possible in order to improve the chances of a recovery for the domestic economy. And we have to be mindful of reducing risk premia, not increasing risk premia. And for example, if that means being mindful of the overall debt to GDP levels and the sustainability of the fiscal deficit. As emerging markets, we tend to be capital import economies, not capital export economies as advanced economies. So we need to be mindful that we need to remain an attractive place for investment overall. So in this picture, I think we need to be very cautious. And I know that some emerging markets with a lot of fiscal space and with a lot of strong governance in the central banks may conduct asset purchases to bring the yield curve lower. But I think this is probably the exception rather than the norm. I think unconventional monetary policies are not an over-the-counter medicine. I think that they are country-specific and condition-specific. If an emerging market has relatively high debt to GDP levels and the sole financing of the central bank to the fiscal authorities can increase the risk premia, it will be self-defeating because the long-term part of the yield curve will increase. So in our case, in the case of Mexico, we have done liquidity provision, as I said, trying to avert panic and the dash for cash, but we have not done a systematic asset purchase program. We believe that the long-term interest rate in Mexico has behaved relatively well compared to the region and emerging markets in the region. And I again think that asset purchases are part of the toolkit, but you need to be mindful of the right conditions to use that instrument. Otherwise, it may increase some other risk premia that could affect the intention in the first place. Thank you very much.
Спасибо большое.
Thank you very much. And I also have a question to you. It comes from Oleg Kuzmin from Farm Management from the UK company. The worsening of the sovereign balances, I mean, really a considerable deficit growth or the sovereign debt, could it be considered as an obstacle to toughen the monetary policy in a situation where you might need it in the environment of growing inflation? I want to direct this question specifically to you because Mexico in 2020 has had quite a wealthy experience of inflationary risks, including the risk of the first half of the 1990s. So in such a situation, how the Bank of Mexico may behave itself, what it might do?
I think that question is critical. And sometimes in emerging markets, we would like to have the policy space to be as counter-cyclical as possible and to basically do the most that we can. But sometimes that may also lead into other type of challenges. In terms of fiscal policy and the risk of fiscal dominance, I think it is very clear. If you have unsustainable fiscal accounts and unsustainable fiscal deficits, you may end up restricting the monetary policy decisions. And that is part of this so-called fiscal dominance challenge that it is very important to avert. If we fall into a situation where the fiscal accounts are perceived to be not sustainable and that the central bank is not willing or able to increase interest rates in order to avert inflation, that may in itself increase risk premia in a significant way. So I think at the end of the day, the challenge that we have in emerging markets is we need to try to provide and to foster for a recovery, but without putting at risk macroeconomic stability and maintaining the resilience of the macroeconomic framework.
Спасибо большое. И в продолжение тут еще вопрос.
Thank you very much. And in continuation, as Bank CIB forwards a question from Pavel Pikolov to Ksenia Yudayeva. Inflation somewhat peaked up in Russia, a little bit more than average of 4% annualized. However, the Bank of Russia is eschewing a very much in-depth kind of an involvement and continues talking about the easing rather than toughening. So what makes the Bank of Russia, the listener is asking, to switch over to the hawkish kind of an attitude? Thank you very much for your question. We effectively are looking at our outlook and our forecast where we do see quite a lot of deflationary risks. And that is why we're saying that the space for easing is there. But on the other hand, we, for several times, have been retaining our rate at exactly the level that we have it right now, which is 4.25. Exactly because we're currently observing certain short-term pro-inflationary risks and the risk for the financial stability. And I do agree what Alejandro just said, that certainly one should be quite cognizant of such risks to be able to control inflationary expectation. And that is exactly why over the past 3 board meetings we decided to go for a very refrained monetary policy, against, of course, us being able to see that in the future all of the trends might shift towards inflation. Thank you very much. My next question is to Boris Vujicic, who is the chairman of the Croatian Central People's Bank. So Mr. Vujicic has been the head of the central bank longer than anybody else here since 2012, and he was able to pass through a whole series of crises. So my general question about standard, non-standard measures that he went for. I mean, kuna as a currency finds itself in a very specific proximity to euro. Euro is very close by. So with this in mind, your vision of the future, not only in terms of non-conventional measures, but as well as kuna's future in light of the eurozone.
Thank you very much. Thank you for inviting me, Elvira and Ksenia. It's a pleasure to be back to the conference, even in this virtual way. Hopefully next year we will be able to meet again in person. Now, as regards the question, I agree to a large extent with what Alejandro has said. If you're an emerging market economy, if you do not print the reserve currency, the response in this type of the situation, in this type of the crisis, is usually very different than the response that you see by the major central banks that print the reserve currency. We have been faced with, I would say, unprecedented pressures in the market. I've been through the great financial crisis in the bank. I've been through a number of other crises, but this time around, I would say that the speed and the strength in only a few weeks of the pressure that emerged in the markets was really unprecedented, in a sense that there was, of course, the pressure in the foreign exchange market. In our case, less of a capital outflow, more in terms of the currency substitution and speculation. Currency substitution in the sense that since you had both simultaneous pressure in the FX market and in the asset management markets, basically primarily government bond market, where you had lots of redemptions from the asset management funds and the very little bids in the government bond market. I remember at some point arriving one morning in the central bank end of March, where we intervened in the foreign exchange market, and it was difficult to get the bid in 15 minutes on the German bonds, with traders working from home and the market being really tight. So you can imagine what kind of nervousness was there in the markets. And of course, many people who saw that their asset management values were coming down wanted to get out, and they were running from domestic currency kunas, in which they invested into the euros, to the safe haven for Croatians in terms of the currency denomination. That has created then a parallel pressure in the foreign exchange market and the government bond market. So on one hand, we were intervening in the foreign exchange market to stabilize the currency, which we could do given that we have ample foreign exchange reserves. So prior to the crisis, foreign exchange reserves were 40% of the GDP, which gave us a solid basis to intervene. But just to give you a feeling, in 5 weeks, we sold 6% of GDP in foreign exchange interventions. So the pressure was really strong. But on the other hand, the problem was that we had to start to intervene also in the government bond market through the asset purchases, which is not the QE of the type that the advanced economies were doing before, in a sense that we were not doing it in order or because we believe that this will prop up the inflationary expectations and inflation, but simply to stabilize the government bond market, which was under the huge pressure. And if we have not done that, you could have government bond prices coming down, yields coming up, and the possibility of asset management funds not being able to redeem their clients. If they were not able to redeem their clients, which happened in a few cases in Europe, where at the height of the crisis they stopped redemptions, there was also a potential risk on the credibility of the banks, because many of these funds were sold through the banks as a cross-selling of their asset management arms. So if you have bought the funds in the bank and they stop being redeemed, then you might come to the same bank and ask for your deposits, because you might lose faith that you will be able to reach your deposits. So in a way, there was an implicit threat also that this situation could create a bank run. So basically for us, there was no other way but to start to intervene in the government bond market. So we started to buy government bonds, and we did that very aggressively, I must say. In only a few weeks, we basically intervened as much as the government bond market as we did in the foreign exchange market. Now, of course, for the emerging market country central bank, this is basically inconsistent policies, because on one hand, you intervene in the foreign exchange market, on the other hand, you're creating the liquidity in the government bond market, the interventions, purchasing the government bond market, and that liquidity turns back into the foreign exchange market and drains down your foreign exchange reserves. So that's why the emerging market central banks have less monetary policy space to do what the reserve currency central banks do. So how did we deal with that? In the end, the big game changer, I must say, was when we concluded the swap arrangement with the ECB. And we were the first country out of the exchange rate mechanism that got the swap arrangement with the ECB. The moment the ECB announced the swap arrangement with us, that moment when it appeared on the Bloomberg, the exchange rate quickly started to appreciate. All speculators gave up because they understood that our firepower has increased immensely, particularly because the announcement of the ECB was open-ended. They said, well, this is the amount, but if not enough, we might actually consider a larger swap arrangement. And that has then stabilized the foreign exchange market. Of course, once you show the weapon, you don't have to use it. So we never after had to intervene. And this is a nice thing about the signaling effect of the monetary policy. And then we concentrated really on helping the government in the next couple of months during the lockdown to finance itself basically by, as Alejandro would say, controlling the yield curve, not to go up, actually keeping it at the level where it was before the crisis, And after the crisis ended, after the lockdown, in June, the government did international bond issue, and we bought all the proceeds and basically replenished the foreign exchange reserves. So this was the idea, and this was, I would say, a textbook coordination between the monetary and fiscal affairs. We helped the government, to go through these 3 months of the lockdown to stabilize the government market, and later on they sold us all the FX proceeds after the market stabilized, and they did the international issue. Of course, this is something which we do only in the case of this type of extreme crisis. We do not do QE otherwise. Even in my country, there was a misunderstanding. They said, aha, so now central bank has embarked on doing the QE, we can expect more. And I said, no, this is what we do when we really need to stabilize the markets. But in normal times, we simply create enough of the structural liquidity surplus, but we don't do a QE. As you said, we are now on the way towards the euro. We decided to adopt the euro. And for a country like Croatia, it really makes sense, because when you're a small economy close to such a large monetary union, then basically, as I explained, and I could explain even more, your degrees of freedom for the independent monetary policy are severely reduced. And importing the credibility of a large Eurozone certainly brings more benefits to such an economy than keeping your own monetary policy, where you basically have to shadow the ECB in terms of your monetary policy decisions and keep your foreign currency tied to the euro. We do have some flexibility, that's true, but we don't have the flexibility. We cannot allow our currency to go up or down 20% because it's so tied to the Eurozone, the real economy. The government is exposed in euros. The companies are exposed in euros. So given that they have debt denominated also in euros, any depreciation of the domestic currency increases their debt. And that's why we cannot actively use the exchange rate to the extent that some people think. And this is also the main reason why we decided to move now towards the euro and to adopt the euro in next years.
Thank you very much. I have the following question, which I will direct to Oleg Vyugin. Myself and one of the listeners together. From the point of view of your expert experience working in the central bank as well as in some of the commercial bank, how do you assess the effectiveness of the central bank's measures? And Miroslav Zinga from Austria is asking to what extent the function of the central bank as a supervisor of financial markets can be substituted by such measures as QE, quantitative easing, in order to prevent deflation. I mean, bearing your experience that you had on the Securities Commission, so to what extent you may rely upon regulatory functions rather than purely quantitative easing? Thank you very much. First of all, the central banks of the emerging markets as well as advanced markets effectively throughout 2020 found themselves in totally different positions in a sense of a transmissionary mechanism of expanding the balance of a central bank upon basic macroeconomics and inflation in the first place. And that has predetermined totally different line of behaviors by the central bank, because it is customary in here to say that, the Central Bank of Russia in some way misbehaved itself because it has not followed suit in line with what the major central banks of other advanced markets took. But we know the reason, because the expansion of the balance in the case of the advanced markets turned out to be quite negative in terms of its effect upon the general level of inflation, while in Russia, and I did some research on what the esteemed chairman of the central banks attending this meeting are familiar with, situation is slightly different, and that has defined the policies of the emerging markets, and specifically also so was the case in Russia. So I believe that the Russian central bank's response, and Ksenia here listed to us the considerations. So the Russian central bank's response was very adequate. And when the expansion of the central bank's balance was quickly transforming itself into inflation, the main task in fighting the crisis that has emerged was certainly upon the fiscal regulatory authorities. And so, answering the question of our listener, what I can say, the thing is to try and to influence such serious macroeconomic indicators as inflation, deflation, through the regulatory mechanisms applied to commercial banks would be counterproductive, because when the central banks deal like commercial banks, the issue at hand is stability and their ability to continue putting basic liquidity into the economy. And I'm basically not familiar with such examples where the central banks, through regulating the work of marketplace financial institutions to impact basic things like inflation, although one may partially imagine it and do it, like Ksenia said, that was partially used in 2020 by the Russian Central Bank. But of course, an interesting question is why the transmission mechanism work in so different ways. But if there's time left, we may talk about it. So I would prefer to limit my answer to a specific question. Thank you very much. We are gradually moving over to the second part, and I may quote a few more questions, and I would ask Ksenia to comment on what we've just heard, and possibly also answer the question from Nikolai Frolov from Sberbank. What will be the future of the bond acquisition? Because central bank regulation article number 22 says that it shouldn't be done, but maybe you will have to. And in case you do, well, the law has to be changed. Article 22, I would say, deals with the primary market rather than just forbids it over the counter, because we always said that as an extreme measure this could take place. And as I have already stated in my answer, we think that in the meantime the market is not sufficiently stable. This year we didn't have any need for such a thing, but of course the low sovereign debt in this case really is shielding us. So thanks very much for such a responsible fiscal policy in this country. But there's another point that I would like to comment upon, considering the way situation may evolve. I mean, there could be different answers, but I really would like to give a short comment. Boris was talking about the kind of impact that a small number of non-banking financial institutions like the asset managers affected the market, and how the central bank had to respond. I would say that this year we do acknowledge quite a significant shift, because in our economy banks are playing quite a big role, and possibly the kind of policy that we were pursuing, we could have afforded to pursue it, and that was related to very dominant positions that the banks had. But on the other hand, we also do acknowledge that after a considerable easing of the monetary policy, the interest on the part of the household towards investing into non-banking securities, non-banking interests really grew. We had this a bit of a counter-cyclical trend as opposed to some other countries, as opposed to Croatia. And now, thinking about it as a challenge into the future, it's really interesting, because Boris also mentioned that there was a bit of a fear because of the fact that all these instruments were being sold through the bank, and so these problems of the non-banking financial institutions could quickly engulf the banking institutions. And so we also think that whenever the non-banking instruments are being sold through the banks, they're not always straightforward. Households may get confused about what kind of instruments these are, and the kind of announcements that we heard yesterday that there is a very strong need to regulate it so that people who are not literate enough, who are not well informed, who are not knowledgeable, should not really take such a risk. And whenever it takes a massive kind of a process, it may have some dire consequences, both for the financial markets as well as for the national economy, particularly in a critical environment. Thank you very much. Let's carry on in the remaining time about the future. Recently, I see. We have been joined by Elvira Sahibzadovna Nabiulina. Yes, we're very happy to see you. Well, I was told, yes, the sound was going to be connected a bit later, so let me now announce the question. So, nevertheless, the outlook of a not only macroeconomic nature, but institutional, because this kind of a crisis and similar kind of events during the past 10 years really raised a lot of question towards independent central banks, whereas during the previous 50 years, after 1970s, the course at the independence of the central banks was a bit of a mainstream policy. Right now, there is a bit of a risk that there is a broader kind of a coalition. It has always been there, a broader coalition of those who are objecting to such independence of the central banks. So how strongly that may be a trend, or broadly speaking, what kind of reformation of the central banks are required in order to be able to successfully respond to the future challenges? On my behalf, I shall add, certainly I'm analyzing what the leading central banks in the world are doing, and one must say that they've been quite successful in dealing with the challenges that they encountered in their economics over the past 12 years. So, who may start giving us an answer? Elvira Sahibzadovna, is she connected now? Can she hear us? Elvira? Oh, yes. So I'm going to be the first one? Yes, if you're not against it. Yes, I'm very happy to welcome everybody. Can you hear me? Yes, we do. All right. I'm very happy to welcome everyone. Yes, it is true that this new environment creates enormous challenges, not only with respect to the nature of economic growth, but also as to the role played by the central banks. We in the Russian Central Bank, as you know, are adhering to more of orthodox kind of views and the policies, trying not to experiment very much with unconventional instruments, specifically for the purpose of remaining effective in achieving the kind of tasks that we believe the central banks should face. But I do agree with Vladimir Mao in a sense that a bit of a dilution of borders, the thresholds, is growing between the central bank and the government, not only in the area of the fiscal policy, because there is an expectation, there is a bit of a demand for that. It is quite evident right now, and it will become only stronger. And why it will become stronger? Because there is a very strong probability that the rates of economic growth shall remain subdued, and considering the existing disbalances and, if you will, bubbles in the financial markets, when there is no effective reallocation of capital in favor of more productive sectors and economic entities. These are also the consequences of many years of a softer monetary policy. So such economic growth may go at a very slow pace, while the fiscal stimulus in any given country is limited because of the accumulating sovereign debt, the structural reforms. Something that we repeat as our mantra is something that people are very slow to go to because they're very painful. They are affecting certain interests, and nowadays, against the backdrop, and the overall public concern, these are going to be very difficult to initiate. And so in my mind, there will definitely be a stronger leaning towards easier decisions based on the experience of 2020. Look, we, the central banks all over the world, we've printed lots of money, inflation didn't go up, so you may construe that you can do it for many years to come without any risk whatsoever. And I believe this kind of an attitude will be increasing in its manifestations, and so there will be a strong temptation to go for such measures. But I would say that that would lead to very much bad consequences long term. Not like bubbles, because bubbles do blow up and everybody sees in it prices exaggerated for assets. But if you don't pump them out, then all these bubbles will burst, and those would turn themselves into the risks of financial stability, the risks of inflation. So you have to be cognizant of it. And so I do say that these kind of challenges will remain. But how you can ensure yourself, and how can separate countries can avoid it, I would say through a well-balanced macroeconomic policy, even despite the fact that in some countries, in some of them, such views may prevail. All right, thank you very much. I would agree to what Elvira has just told us. My assessment as an expert is that the kind of expectation or demand that we see in the public is really not about going back to the days when the central bank must be under the control of the Ministry of Finance, like the case was in the history, but even, let's say, the Minister of Economic Development, to become the tool to propel growth, to become the development bank. So transforming the central bank into the development banking institution right now, I would say, is one of the most serious things, not as much as in this country as in many advanced markets, and that flows directly out of the modern monetary theory. But I would like to ask Boris Vujicic to continue this topic, since we also have a question from Mr. Frolov from Sberbank. The question is as follows. If Croatia is planning to join the Eurozone, and that is basically what you've told us, then a very specific question. So if the sovereign debt, based on the results of the crisis, 83% of the GDP, so what are you going to do? Should you enter the Eurozone having such a sovereign debt, and what will be your future then in light of such a debt?
Thank you. Well, yes, the public debt. First, there is something which is called the Maastricht criterion or nominal convergence criterion for entering the Eurozone, which says that if the public debt is above 60%, then it should drop by 1/20th of the difference between 60 and the current level of the public debt yearly, in order for a country to qualify for entering into the Eurozone. Now, Croatia will certainly be able to qualify, and the mathematics is, I would say, very simple. This year, public debt is going to shoot up. It increased by now from 72% to 83% of the GDP, given the large deficit because of the lockdown and the fiscal support to the government. But then next year we expect a strong rebound of the economy, and since the denominator will increase fast, then of course the ratio of the debt to GDP will come down by probably twice the current requirement of 1/20th of the difference between 60 and 80. Probably we will end up at 86 or 87% by the end of the year, because we're now in a second phase of lockdown in December. Now, if you look at the average level of public debt in the Eurozone, then the Croatia doesn't have such a high public debt to start with. So this is something where we do not stand out from the rest of from at least the average of the Eurozone, and Croatia has been reducing the public debt or opening up the fiscal space 5 years basically before the current crisis, where in each of these years public debt was decreasing between 2 and 4 percentage points of the GDP. And under our projections, it will again start to decrease from next year on, in our projection horizon of next 3 years. So, if I would say if there was not for the pandemic in 2020, by the time we would be entering the Eurozone, our forecast was that the public debt to GDP would decline below 60%. Now this will be moved by another 3 to 4 years. But again, we expect that the public debt to GDP will come down towards the 60%. Now, being in the Eurozone will make that fiscal adjustment easier rather than more difficult, given that Croatian public debt will become subject to the ECB's QE. And that, needless to say, will reduce the yields and increase the demand for the government debt of Croatia. And in that sense, by lowering the servicing costs of the debt, will speed up the fiscal adjustment. Finally, just the last thing to say, of course, the government should avoid the temptation getting into the Eurozone and having that credibility effect of ECB buying its debt to abandon the policy of the balanced budget, which it has been running for the last 3 years and intends to run in the future. So when we speak about the fiscal policy, it's always about the politics and politic decisions, and notwithstanding the monetary policy framework that can support and help it, it should nevertheless not create the wrong incentives for the governments not to do things that they should do, and this is always open up the fiscal space, reduce the public debt, because at some point, as it was witnessed this year, you will need that fiscal space. So if Croatia has not reduced its public debt by 14 percentage points of the GDP up until 2020, it would have had less fiscal space to respond to this crisis now. And in the future, we know there will be another crisis when we will need this fiscal space. So it's best to start to prepare and create it right now.
Спасибо большое.
Well, thank you very much. We practically don't have any time left because we also need to round up our voting. But I would like to ask Mr. Tigers de Leon. Well, I mean, the central banker should be an optimistic person and should look optimistically into the future. That is quite all right. But what is your vision, the key task that the Mexican central banks will face during the next 5 years? Could you give us a very brief answer, please? And after that, I will ask Mrs. Nabiulina to wrap up. And Mr. Bugin also wants to say something.
Yes, and just let me first start mentioning about independence and autonomy and the role of the central bank. And obviously, fiscal policy and monetary policy should have the best of intentions and goals for as a social outcome. We can say that stability is a public good that we need to provide it. I think the independence of central banks allows us to have a long-term view on our policies and not be constrained on short-term pressures. I think in the past, in the case of Mexico at least, we have had experiences where fiduciary money has been abused when that autonomy was not present. I think that is why the autonomy, it is, I think, very important. That doesn't mean that we can coordinate to achieve the best social outcomes when a specific challenging situation like the pandemic comes to challenge us. I think that we can coordinate to achieve the best social outcomes, but that doesn't mean to be subject to one to the other. And I think it is a good design to have a long-term view on monetary policy and to see stability as a public good that we need to deliver and to be the guidepost of all of our interventions and our actions. And in terms of some of the challenges that we face going forward, I think we're seeing this peculiar situation where advanced economies have had a very weak aggregate demand. You can say that globalization, technological change, the great financial crisis, and now the COVID are all disinflationary shocks, mainly in advanced economies. In emerging markets, we have seen the exchange rate bring some inflationary pressures, at least in some of our countries, and we are probably facing different challenges. For us, I think that we need to try to do as much as we can to support the economic recovery, but without compromising macroeconomic and financial stability. This time around, the financial system has been part of the solution, not part of the problem. And basically because the financial sector was not the epicenter of the crisis, and we didn't have an economic crisis with a relatively weaker financial system when this appeared. So we need to maintain, I think, both macroeconomic stability and financial stability, and those, I think, are our main challenges as we go forward. And thank you very much for the opportunity. Thank you.
Уважаемые коллеги, нам надо...
Dear colleagues, we're supposed to wrap up, so I must apologize, Elvira Secretary, that I'm not going to give you the opportunity to say a final word, but the organizers and your employees do insist that we must be spot on time. But I would say that we have witnessed a wondrous consensus of views, and which is not surprising when the leaders of the central banks get together with such a great history against, of course, seeing so many different views in between the three of us. Do we have the results of voting? Yes, we've raised questions. Oh, yes, right, here they are. Here's the results of our voting. So let's see. The main challenges: debt and the fiscal part, the budget. Well, honestly speaking, that sounds a bit menacing. If the main challenge is the debt, then the issue about the independence is going to be brought up very often. I see a bit of an institutional risk in such a voting, but, you know, as they say, forewarned is forearmed. So I suppose that, let's see, I think if I was to vote, I would definitely vote for the high inflation risk, because it seems to me that these are the kind of risk, because as we know, high inflation comes when everybody believes that it has disappeared for good. And at exactly that point in time, we fall into the trap of inflation or stagflation. Thank you very much. Thanks to the organizers. I think that we've had a brilliant kind of discussion, and I believe that this kind of a conference that has become a regular event with the central bank will only be happening more often. Thank you very much.
Thank you. Thank you. Спасибо.
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 Goodbye, goodbye.
Good evening, dear colleagues. I'm happy to welcome you to our session, which is called Mortgage: How Can We Avoid Inflating the Housing Bubble? Something that has been discussed quite actively of late, and the mortgages have been growing quite rapidly, of 37% on an annual basis. The mortgage market has very good prospects in Russia, and the quality of mortgage loans is very good. However, international experience shows that continuous growth of mortgage lending may create a bubble. We have a number of panelists today with whom we are going to discuss what would be the risks of mortgage lending and how strong those are. I prepared here a number of questions for the panelists, and we are also expecting some questions from the audience, analysts and experts. In the studios today, we have my colleague Evgeny, who would like to introduce our panelists. Thank you, Elizaveta, and dear friends. We have John Girov here, the Senior Vice President of SBER, Nikolai Zhuravlov, Deputy Speaker of the Federation Council of the Russian Federation Online, Anton Tabak, Chief Economist of Expert RA Rating Agency, and Artem Fedorko, Deputy CEO of Dom.rf JSC. A question to our audience. Please vote on that, and please show the question that we would like the audience to vote on. The question is as follows. Do you expect a bubble in the mortgage market in the next 3 years? Yes or no? So my first question is to Nikolai Andreevich, Nikolai Zhuravlov. Nikolai, how would you vote on this question, and what do you think needs to be done to avoid a bubble in the mortgage market? Thank you. Nikolai, can you hear us? Well, while we are having some technical difficulties, perhaps we will address this question to a person who should have foreseen and should foresee such risks. John Gary, the question is yours. Thank you very much and good evening. Indeed, to answer this question, we need to remember several facts about the mortgage portfolios and generally about the mortgage market. Elizaveta mentioned that indeed the mortgage portfolio of banks is quite stable, and stable more than any other portfolios of loans, say credit cards or consumer loans. In our case, only 1% in the mortgage loans are NPLs, and that share is not growing. So we do see some good quality of mortgage loans. The second fact is that mortgage portfolios throughout the crisis have been showing some strong results and good discipline, while the risks are growing, of course. But even in our portfolio, where LTV is above 100%, just because this sometimes happens, because the prices on real estate may be falling. But even there, we see good discipline. Another factor about the behavior of our customers is that we do not see quite long duration of those loans. The duration is quite short, and people are trying to really pay up their loans prematurely and quickly, just because the rate was quite high for loans. So overall, we see good quality of loans, both in normal conditions and in times of crisis, which is very important. The second group of factors is about macroeconomic parameters, and one of those is the relation of mortgage loans to GDP. In Russia, although this is about 10%, it is still quite low, and it is lower by an order than in many European countries or in the US. So we cannot claim that in Russia we have a significant share of mortgages in the economy. So it does have good prospects to grow exponentially in the coming years. And another important macroeconomic factor is the availability of housing to population. It is, say, from 15 to 25 square meters in big cities, which is not really high. Which means that we have some fundamentally unmet demand for housing. So putting all of this together, claiming that there is some mortgage bubble or any signs for such a coming bubble, I don't really can say so. The volumes are not that high, and the behavior of customers really does not suggest that people are going to buy housing using mortgages, leasing out, etc. So we don't see any such growth. Maybe we can see some initial hits and results of the voting. As you can see, most people are optimists. They do not expect a bubble in the coming 3 years, but there's still 46% of those who see such a potential bubble in mortgage lending. Now, maybe Nikolai, can you hear us? Nikolai, can you hear us? Well, while Nikolai is trying to fix the connection problems, I would ask Anton what he thinks about a possible crisis in the next coming 3 years, and what do we need to do to avoid a bubble there. As the voting demonstrates, there's a split opinion there. And I would say that a mortgage bubble is not something that we expect because of the reasons that my colleague mentioned and because of the macroeconomic circumstances. But we do see some growing problems in the mortgage market and some of its segments, but it is only partially related to mortgages. For example, the Far Eastern mortgage program really vacuumed up all the markets there. And a good idea, actually, against the background of everything else, was like adding more fuel to a fire. And there's a potential challenge with the new system, which is more safe and secure as we believe, that is using escrow accounts for the future buyers of real estate. But there is also some problem with the capital of developers. The loan quality is good, but they don't have resources to really provide more supply. So there's the problem is about the supply rather than the demand. The demand is supported by such federal programs as the family capitals and maternity payouts and other circumstances. But if supply is still limited, then the prices would be growing inadequately, and the prices would be far from the capacity of the population. So we don't see an overall bubble, but we do see some little bubbles here and there in the mortgage market, something that we already observed today. Thank you, Anton. I now can see 2 optimists, and I know who would have voted for not expecting a bubble in the mortgage market. Nikolai, maybe you can hear us now. Nikolai Andreevich, can you hear us? Well, unfortunately, we cannot hear you. Shall we probably move on, and maybe Anton, you would join those who would have voted in favor of expecting a bubble in the mortgage market. What do you think? Well, good afternoon. Perhaps we would be representing here the side that would not really expect a bubble there. In terms of terminology, we should not be talking about a mortgage bubble, but rather about a housing market bubble. Thing is that people are using this mortgage money to buy some housing, and there we should really trace the prices in the real estate market, whether they can really be in line with the situation or not. In terms of mortgages, mortgages really are a market product based on market principles and determined by market factors. Even despite a significant growth of subsidized mortgage lending for 6.5% for the primary housing and primary market, but still mortgages are only 30% of such loans. Most of the mortgages are actually spent to buy housing on the secondary market. So this quite active growth of the housing market is caused by the fact that, just like any market product, mortgages are also quite sensitive to the changes in the supply and demand and price fluctuations. And we see that the rates were going down in all the market segments, and the average annual rates would be lower by 2.5%, which is actually quite significant. So lending would be quite cheaper, and the market dynamics should actually be following. So we can expect such numbers. So here, I would really agree with Jangir that so far we do not see any prerequisites or any signs of a bubble. We don't see any growth in NPLs. We don't see any softer policy of banks to the first payment, like the 6.5 subsidized mortgage lending program. The upfront pie should be 15%, but in actual fact, with over 100,000 such loans issued, the usual first payment and first installment is 30%. So we really need to think about whether supply is growing, and it's an interesting question, and we should be thinking what is happening to the supply so that we can avoid the imbalance. And indeed, the supply is growing, and we see that since August to November of this year, we saw more than 12 million new developing projects launched in the market, which is by 40% more than last year in the same period of time. So by 40% we have more new developer projects started. So this higher growth of supply would be hopefully met by higher demand on the one hand. But on the other hand, even that supply that we already have, the developers are selling at a higher rate than they actually initially expected. There are more conservative models of banks and developers, but in actual fact, the sales are really much higher than initially expected by the developers. Thank you very much. Let us try to go back to Nikolai Zhuravlov. Yes, Nikolai, we can hear you again. So the question is, how would you have voted on the question of whether you can expect a bubble in the mortgage market or housing market in the next 3 years? Perhaps I should start with what we need to do. Unfortunately, I did not hear what the previous panelists had to say, but it is quite obvious that the mortgage market depends on many factors. Of course, the macroeconomic situation, First of all, the macroeconomic situation in the country and the economic situation in the specific regions or provinces of Russia, and of course the policy of banks. The idea is to really have a good mix of all those steps and measures to avoid an overheating of the market and an explosive type growth of prices. We need to monitor the situation all the time, and the public policies should be focused on supporting the construction tempo on the one hand, and also to support competition on the other hand. And of course, supporting the primary market was a key element. That was the right decision that was made last spring and summer, and the program was extended to provide such subsidized lending. It also supported the sector as well as the adjacent sectors of the economy. But there are different groups. A group where the demand is higher than the supply, like in Moscow and St. Petersburg and other big cities where people have higher wages compared to the rest of the country, and where in the provinces where a lot of construction is going on. And of course, the demand for mortgages would be higher than elsewhere. And that group of customers actually consumed the whole volume of available subsidized mortgages, or most of it. And there we need to think hard whether we need to really provide so much subsidies and maybe go down with the available subsidized mortgage lending. But the second group of regions and territories is where you have more or less a balanced situation with the supply and demand, where there's no deficit, but there's no much growth. There we need to think about regulation. And then the third group of regions is where the prices are low, the demand is low, but nobody is actually developing anything there. There is a low margin, the low income of people there. So there you should provide subsidies both by regions and by segments and by types of the customers. There you need really to provide constant monitoring of the situation to avoid the excessive growth of prices. Much has been said by the need of a policy that we really need to deliver money to those who are in need of this money. So we need some fine-tuning and thoughtful analysis to produce a more fair policy, and this money would be really enough for even those who are in most need of this money. Not really those who work in Moscow City, but those who are in real need of this money. And of course, there are some federal programs like in the Far East for families with children, for young families, etc. For example, in the Far East for families of medical workers, etc. There we should not make a stop. And unfortunately, most of the money for those programs actually went to those who would have bought some housing even without that money and otherwise. But perhaps the reason for this was the need for a faster decision and solution to support both the construction sector, the housing sector, and the mortgage sector. If you can ask me if we should have really delivered that program, I would have said even today that we should have done that. But maybe looking forward, we would be probably be more reasonable and avoid the bubble. And if I may, I would like to say a couple more words. Yes, Nikolai, we are here. Just I wanted to add that if I can do that, I don't know if my colleagues mentioned that, but now we are talking about the subsidized lending for the primary housing market. As regards the secondary housing market, there has been quite a lot of debate about that we should not really provide subsidized lending to buy housing on the secondary market. But there is some logic there. There are regions where you don't have any new developers projects, and there we need to support the secondary housing market. People still need to buy housing, and if nothing is being built, and the secondary market is not really supported with the subsidized loans, then people would be leaving those regions, and you cannot really develop new projects in those areas too fast. And following the same logic, you need also to support the low-margin projects in certain circumstances, especially perhaps it is very relevant when we're talking about a law on the comprehensive development of territories and its fast approval.
And there, a good set of programs of support can have a synergetic effect. And of course, these programs have to be adjusted at least every 6 months, every year, with reference to the segment, to specific regions, so that the prices do not simply creep upwards, or if they do grow, so that it stays within a reasonable margin. Thank you very much, Nikolai. You have touched upon a very important topic that the previous speakers haven't spoken about. I'm sorry if I repeated what the others said. No, you didn't repeat anyone. Let's move on. First, let me sum up the first part of our discussion. There are no speakers on the panel who believe that there's going to be a big bubble, only small bubbles. And I would like to show you a presentation, and I would like to give over to Yelizaveta. Thank you very much. The first slide shows us the price dynamics and the market. As you can see, the prices are climbing, especially in the primary market, more than 20% annually in some regions. And the second slide shows that there is a huge increase in prices, which makes housing less available and affordable to the population. Affordability, which used to be achieved through a lower key rate, through programs for subsidizing. I've got a question to Anton. You have touched upon the price dynamics in the market. I would like to ask what you think about the reasons behind this price increase. Do you see there are any additional risks because the primary housing market prices are growing at a far higher rate, at a far higher pace than in the secondary? Yes, the thing is, the affordability of mortgage is only one of the factors. The principal factor for the increase in prices is lack of supply, as well as a bigger demand for improving one's living conditions. So mostly real estate is used as an asset to, save your savings and assets, because assets like real estate are used to be highly stable, even though that's the case. Sometimes it's not. But just have a look at the regions where real estate has been expanding. It's the Russian Far East, Amur region, and Primorsky Krai and others. That's where the mortgage program is in place that has swept over the market. So the primary market prices are growing at a greater pace because mortgage is provided for newly built houses, and secondary market is not subsidized, and besides, newly built housing is of a better quality mostly. And you know that the increase in prices has almost completely offset the effect yielded by the decrease in interest rates, and those regions that have seen an explosive growth, they see this problem firsthand. So once again, this is not just about the affordability of mortgage, because mostly mortgage is drawn with a very big chunk, first installment, Some people are using maternity capital to do that, and the quality of such mortgages is quite high. The price issue has to be addressed through providing better capital, greater capital to developers, and also through expanding the supply. Maybe an increase in the property taxes could be used just for that, to stimulate this process, even though that is not welcome. Natalia Orlova from Alpha Bank is asking whether the price cannot be determined not just by the demand, but also a new trend which we are witnessing, that is a lower popularity of bank deposits and the search for alternative investment methods like in real estate. So what do you think the contribution is of this factor? How widespread is real estate as an investment asset? Yes, that's true. That does happen marginally, but still the bank deposits are very often not that big so as to be sufficient to buy real estate, even though it can be used as the first installment, and many regions are still using real estate as an asset for saving, especially those regions where the real estate is not that expensive so far. And over the last months, I've had 2 or 3 conversations when people ask me whether it's worthwhile buying a 20, 30 square meter apartments to let them, saying that it's very profitable. I don't know whether there is any truth behind such thoughts, but usually it means that the trends are shifting and there is a change afoot. Thank you. Nikolai, can you hear us? I hope you do, because our next question goes to you. Right now, from the price-related risks, we are moving on to the debt burden-related risks. Could you please put on the next slide? My question will be as follows. The debt burden at the macro level has somewhat increased against the backdrop of lower incomes for the population. What do you think about this trend? Are there any risks involved? What do banks have to do to make sure the debt burden for our citizens is not that big? You know, as a follow-up to what we've been talking about, we've seen a huge decrease in interest rates, the deposit interest rates and credit interest rates due to the central bank actions to inflation targeting and the monetary policy we are pursuing, and these lower interest rates push people to take out their deposits and to try to invest them in real estate, for instance. But we are not seeing a catastrophic drop in incomes, in livelihoods, nor are we seeing any drop in the financial discipline, even though this year has been a tough one. And the regulation of mortgage portfolios by the central bank, as we can see, is very reasonable, very sensible. It's not going to lead to a huge burden. The PTI was introduced 18 months ago or so, especially as it applies to the mortgage market, and that was an event of huge importance, of huge significance, and the central bank did it counter-cyclically, so all the banks were ready for that when this coefficient, this indicator, was introduced, and it's very good that it was introduced and tested before the coronavirus crisis struck. And the central bank has to stand firm, sticking to its regulatory line, especially now that we are witnessing an increase in real estate prices. If these prices go down, maybe we could revisit that, but so far, no. Mostly, what we need to do is not to give priority to consumption credits uncollateralized and such loans without collateral. There is a global shift towards collateralized lending. And it creates a healthy situation, the one we're seeing right now. The banks have shifted their policy, acting more sensibly, more reasonably. I know that in the beginning, some banks tried to do something with the deadlines, with maturities to avoid using PTI right now. They've shifted, and we've got to monitor the situation every 6 months or so. Sometimes we've got to tighten the regulation, sometimes to loosen it, depending on the situation. And if there are any risks, the appropriate measures can be taken, and this will have a systemic impact. But so far, it's not necessary because the banking system is stable and the bank's capitals are sufficient. And I think that the credit burden for our citizens is at a stable rate. Yes, of course, we are looking at the general statistics. We know there are specific cases, people ending up in a difficult situation. But to address these specific cases, there are mechanisms in place to help with that, like an interest rate break, there is a moratorium, and deferrals of these interest rate payments assistance, and there is a facilitated procedure to file for bankruptcy, for insolvency, and I think this situation is overall under control. Thank you very much. Elizaveta, over to you. Thank you very much. Let's move on to the next slide. I would like to ask the next question of Jangir. Jangir is responsible for the risks at a leading lending institution in Russia. My question applies to the risks in terms of mortgage standards. There is an important indicator, the initial installment. The smaller it is, the greater the potential risks are. We are carefully following the situation, and as we can see in certain segments, we saw an increased share of high LTV loans in the primary housing market mortgages. The share stood at 40%, to be more precise. My question is as follows. The borrower's image, has it changed? What does the standard borrower look like right now? Should we be worried? If the prices go down, have you revisited your models, your stress tests? Are you factoring in this potential drop in prices? Or have you revisited your models because the prices have been growing recently? Thank you very much, Yelizaveta. As far as the lending standards for banks and for Sber in particular, I don't think the banking system has relaxed its standards, nor has Sber done this. And I agree with the colleague who has spoken on that. The growth of the market and the portfolio is due to the inflow. We see a greater demand for mortgage this year, and this is due to the government support program. So the standard borrower looks just the same, even better, because this government support program has nudged new clients towards drawing at a mortgage. They didn't want to do that before because they thought the interest rates were too high, but right now they've changed their minds. And as we can see, the credit metrics are better, and the discipline is better as well as far as LTV is concerned. It's the same because the government support makes it possible to issue a credit if the initial installment stands at the level of 15%. But we've got to remember that the credits are paid back very soon. The first year, it's 7% of the principal. In 2 years, it's around 15% of the principal of the loan. So if we look at the LTV on average and the portfolio, we do not see any increase on the market. And sometimes the markets are even paid back prematurely, which all translates into a lower LTV. Now, you asked me about the stress tests, and I agree they have to reflect the market realities. And we devise our stress tests, factoring in a possible drop in prices. But this year, given the increase in the prices, we have reflected that in our stress tests as well. I would like to comment on what Nikolai Zhuravlov has said. I agree that the central bank is working sensibly, resorting to the macroprudential measures. If the central bank sees that there are any indicators of a forthcoming bubble, any macro risks, the central bank acts accordingly. And we would very much like these instruments to be used cautiously on a case-by-case basis. If there is no risks right now, then we should not discriminate against the mortgage market, because that would be premature, I'm afraid. Thank you very much. Incidentally, we've got a question coming from one of the analysts in the audience. Oleg Shibanov from the Russian School of Economics is asking whether the Bank of Russia is willing to use macroprudential policy to rein in a growth of high LTV loans. Should we were using our macroprudential policy in a counter-cyclical fashion. I would like to remind you that back in March and in April, we decreased the supplements to mortgages, and we used the reserves of capital to buoy up the banking system amid the pandemic, amid the stress. We see growing demand, and this demand, some of it is due to the program, some of it is not. But as of now, we are not seeing any bubble, any risk in the market. Moreover, we believe that we can still keep the current counter-cyclical measures. Be that as it may, we're going to follow the market. We're going to look at LTV. We'll see how the banks are acting. And of course, we will constantly look at the necessity of keeping up the supplements. But in the near future, we do not think that it is going to be necessary. Evgeny, over to you. Thank you, Elizaveta. We have already looked at a number of different risks. Let's move on to the next one. My question goes to Artyom. It's no secret to you that a mortgage is a long-term product, whereas the bank's assets are mostly short-term, which creates an imbalance between liabilities and assets, and it creates an additional risk for the banks. Right now, just 5% of mortgages are securitized. What do you think is the solution to this issue? Thank you very much for this question. You've touched upon a very important subject. This is the topic of interest risks and how it translates into the economy. And many issues we've spoken today are related to this. As we can see, that the monetary policy, decreasing the interest rates, all of that translates directly to the economy. The financial assets are the first one to respond. We see how the financial markets have grown amid decreasing interest rates. We've seen some positive dynamics in the Russian markets. The prices have grown in real estate and other assets. It's all very logical.
And borrowings to them are cheaper, and they have more access to money to put into the developers' projects. Another point about the slides that we saw, indeed, maybe it is more about behavioral patterns of people. The share of mortgages in the total debt of the households, unfortunately, is quite low. In advanced economies, most of the debts of households to banks are mortgages, and we don't have the same here. And this is something that we all need to do together so that people, first of all, would borrow money from banks to improve their living conditions, perhaps pay for education, but not to any other purposes. That's the world's best practices. And indeed, banks, if you use historical portfolios, they made good money. The mortgages that were issued in previous years had a very good margin to banks. Many borrowers refinanced using the lower rates, but not all of them. But if the rates would be going backwards, then the portfolios that are being put up together would produce losses to banks, and they would really lower the appetite of banks to mortgages. We think that a key instrument, a key tool to manage interest rate risks would be mortgage papers and securitization of mortgages, something that has been tried in many other countries and in similar models, although mortgage models are quite different in different countries. If you take the similar models as in Russia, like you take the Southeast Asia or some Nordic countries, there they actually transferred the long-term risk from the bank system to investors who have comparable maturity liabilities like the pension funds and other investors who have more propensity to such long-term money as mortgages. Here, I would like also to thank the Bank of Russia for doing such a great job to really stimulate this market. And against the background of the falling interest rates, especially deposit rates, the interest of people in an alternative investment mechanisms is growing. So people are trying to invest in various financial instruments on the market, and having such mortgage papers would be a very important story, not only to banks, but to households as well. And to banks, this would be another opportunity to issue more money at good rates and in higher volume. John Gear, yes, answering the question of liquidity of the bank book, Artyom actually came to discuss the risks, and indeed the interest rate, the long-term interest rate risk is the highest, and the premium that banks charge to provide long-term lending is already put into the size of the interest rate. It's not that banks cannot hedge this risk on the markets, and that's why they put this into the rate. But the hedging of this interest rate risk would really cause the average interest rates to go down. Artem also mentioned some securitization effort there, but there's another popular instrument in different countries, like the mortgages at floating rate, and in some countries this is the dominant instrument where most of the mortgages are issued at a floating, at a flexible interest rate, and this is something that we should be looking at as well, and banks with the Bank of Russia should really work on the regulatory frameworks to have this market in the country. A couple of words about that in the continuation of what Jangir said. I fully agree with that. Indeed, in many countries, there is a dominant trend of having mortgages with a floating rate. However, in Russia, historically, we have had a different model. Because of the volatility of interest rates being very high, then to the households, it is more comfortable to work with the fixed rate mortgages. So if the risks if the rates are growing, then you can hedge, and you already are hedged with the fixed rate. So in such countries, of course, securitization and mortgage papers would be a good way out. In terms of the floating rates and mortgages, this is something that we need to develop, but there we need the educational effort as well, so that people would appreciate what kind of a debt and risk they are assuming. So people who are getting mortgages at a floating rate would also assume the interest rate risk. And we need to educate the people that this is one of the factors that they need to take into account. And probably in the short term, this is something that we also need to take into account. And of course, it is quite clear why there was some preference of fixed rates. We had a period of very volatile interest rates, but because of the interest rate policy of the central bank, we cannot expect the same volatility as we had in 2014 and 15 and in 2009. I wouldn't expect the same, but this risk today is much less if you're looking over a long horizon. There might be some, fluctuation, but it wouldn't be kind of like continuous and off scale. Yelizaveta, maybe you would like to say something. Indeed, in terms of the floating rates, it's an interesting discussion. Let me remind you that in our financial stability survey that we published last month, we also reviewed this problem and reviewed the international experience. And indeed, if such rates are going to be widespread in the market, we also need to really show in our instrument the debt burden and take into account such an option so that we can protect the households, the weak side of the whole deal from risks, so that such loans would not be issued to the people who cannot really support the payments with their income. However, going away from risk management issues to the policy matters, I would like to ask a question to our two other panelists, Anton Tabach and Nikolai Zhuravlov, the following. We are now quite actively discussing the 6.5% program, whether we should extend this program or not. So what do you think? Are there any risks in not having this program extended? What could be the potential problems with that? Perhaps we would first ask Anton. Well, indeed, I believe that on a macro level, on the country-wide level, the fact that we already have lower interest rates and such subsidized mortgages are not that important in terms of their shares. So if they decide not to extend it as of July of next year, then say in May, June of next year, we would be having quite a splash of demand for such mortgages. But in Q3, we would see some dropping demand for such subsidized lending, because this is more or less the behavior of the people. Now, talking about possible extension of the subsidized mortgage lending program, which is called Program 6.5, then perhaps this is something what Nikolai said, that we need to think where such loans are better fit. and were not, because it was more or less designed to support all the developers, but now we should fine-tune this instrument. Nikolai, well, I have almost nothing to add to what I mentioned in my first comments, that we need to have a wise and more targeted fine-tuning of the program. Of course, the program was instrumental in terms of supporting the industry, and we appreciate that. But I would transform the program into some other sub-programs that I mentioned in the beginning, with a regional focus, with a focus on particular categories of households and maybe low-margin projects, so that money would not be following the money, but would be wisely spent in terms of the subsidies. Well, the falling mortgage rates in recent years are due to two factors. Maybe by 1/3 it is the subsidized lending program, but by 2/3 this is the falling policy rate of the Bank of Russia. It went down by 3% of late, and the program gives you like another 0.25% of that advantage. And this long-standing effort of the Bank of Russia to really establish the financial stability would mean that we will not probably need any more subsidized support mechanisms, and the decreasing inflation is the biggest measure of support, I would say. But by the way, on the previous debate, I would like to add that we are in support of mortgage papers. We do understand that this is the strategy. Perhaps the Bank of Russia may support such mortgage papers and securities with rules and regulations, as well as policies to support the liquidity of such paper, perhaps to have it automatically included into the Lombard lists, and maybe also have them covered by the liquidity ratios as well, etc. So we are done with the round of questions. Let us somehow conclude here and sum up here. So 46% of our audience really believe that the bubble is possible. Our experts have a different opinion. They think that the quality of portfolios is still very high. The banks did not really loosen the requirements. We need to develop the securitization, and the 6.5 program requires and needs to be fine-tuned, but nobody doubts that it was efficient in the beginning of the pandemic. Elizaveta, the floor is yours. Perhaps in continuation of your conclusions, I would say that this difference in opinion of the audience and our panelists is also because of the uncertainty that we have in the market today. And we see that the market situation can change quite drastically. In the spring, we tried to adopt some supportive measures, and the retail lending was dwindling back then. Now the situation is improving, and on the part of the Bank of Russia, I conclude that we need to continue our monitoring of the situation of both of the standard lending as well, and be ready to react to possible risks. I would like to thank our panelists and our audience, and I wish you some good evening. Thank you very much.